I would title this episode, Build an Investment Firm That Outlives You. So if you're building a holding company, investing in small businesses, running any kind of investment firm or any kind of company, I believe that you need to study Graham Weaver. Why? Because in a sea of private equity firms all chasing 2x or 3x returns, Graham built one that routinely returns 5x, and many investors obsess over those spreadsheets. And what Graham did was he built a 15 billion AUM firm by focusing almost entirely on one thing, and it's people. And because of this firm, Alpine Investors, they didn't win by outsmarting the market. They won by outbehaving it. They play a bit different game. They don't chase perfect companies. They don't rely on expensive CEOs, and they don't sell their businesses. Instead, I would say they create greatness by backing young, unproven leaders and turning sleepy businesses into multi-billion-dollar platforms. Graham started Alpine with a $25,000 personal loan and a single desk in a sublet office. He had no track record, no big name backers, and no competitive edge. But over the past 20 years, he turned into one of the most consistent compounders in the private equity world. And if we're looking for the secrets, and if you are looking for the secrets, it's relentless personal growth, first of all. Second is talent obsession and the willingness to make uncomfortable bets most firms wouldn't dare touch. Today's episode breaks down the exact principles that make Alpine different and how you can apply them, whether you're, again, acquiring your first small business or you're managing a portfolio of dozens of businesses. I created this small evergreen masterclass in long-term thinking, leadership, and capital allocation, and it all starts with a simple belief. The best investment in the world isn't a stock, a company, or a product, it's a person. So let's get into it. Number one thing, your business is a reflection of your will. Graham Weaver's story doesn't begin in a boardroom or a finance lecture. It begins with pain. The kind that shapes your character before you even know what character means. At 12 years old, Graham's parents divorced. He was left with two things, a lawnmower and a Walkman. Most kids mow lawns and complain. Graham mowed lawns and learned. For hours each week under a hot Ohio sun, he was, again, listening Earl Nightingale, Napoleon Hill, Brian Tracy, and he was constantly listening things like, we become what we think about. Success is the progressive realization of a worthy ideal. Set the goal and burn the ships. By the time he was in high school, Graham had built that daily routine most adults can sustain. He wrote down his goals 3 to 4 times a year, every day. He wasn't just journaling. He was programming his identity, repetition, reinforcement, relentlessness. And he took it further than most would even dare. In high school, he joined the wrestling team. He wasn't the strongest or the most skilled, but he wanted the variety spot. There was just one problem. The team already had a starter in the weight class. So Graham cut 30 pounds in one season to drop to a lower class and force his way in. Let me put that into perspective for you. He was 6 feet tall. He dropped from 155 pounds to 125. That's 900 calories a day. That's like almost like collapsing after practice. That's being almost so depleted you need teammates to physically hold you up on the scale. And he described it in the interview. I would literally crawl into a bed at night with my stomach eating itself, dreaming about the breakfast I'd get on Sunday. But that season, he held the varsity spot. And learning this lesson from him, it was simply like a pure willpower. And that's where the first major insight that separates, I believe, Graham and Alpine from the average investor. Your business is a reflection of your will. Not your model, not your background, not your tech, but your will and your willpower. Guys, real talk. Again, honestly, if Graham Weaver knew about ScalePath, he'd probably plug every Alpine CEO into it, because this is the exact kind of peer network that helps young, ambitious leaders avoid burnout, level up fast, and stay grounded while scaling. So head over to joinscalepath.com and book your free call with their CEO, Rand Larson. What they've done is they built a network of over 2,000 vetted business owners across the US and Europe. So again, when you book a free call, what Rand will do is he will personally intro you to up to 3 operators in your region or niche, people who actually walked your path. And as one of the HoldCo Builders podcast listeners, Nathan, has said, men will literally join Rand's group instead of going to therapy. So again, that's probably the same what Graham Weaver would do if he knew about ScalePath. So head to joinscalepath.com and book your free call with their CEO. Now back to the episode. And he's carried that into every single area of his life since then. At Princeton, he still wrote goals down obsessively. He didn't drink, didn't party, didn't go to football games. He kept a note card in his pocket with his life goals and read it every time he walked between classes. When he graduated and took a job at a high-power private equity firm, he realized quickly he didn't want to be there. It was prestigious, but he wasn't learning. He wanted to start his own fund, so he left. Again, no money, no track record, no LPs. His friends told him he was crazy. This is a typical story. His mentors warned him it would never work because he was just 25 years old with all those things I mentioned before. So he got a desk in a friend's sublet office and took out the $25,000 loan. And that's how Alpine started. Again, with a grit, lots of scarcity, but with a very clear vision. And that's what matters to you as well, whether you're buying your HVAC business or simply a traditional company, or you're rolling up dental practices, or simply managing like a holding company with, let's say, 50 million in assets. You can apply those Alpine strategies, but if you don't really have this willpower, have this will, none of that will work out because you probably give up during some difficulties you're going through. And here's the personal checklist and the first big lesson. Are you writing down your goals? Not once, but every day. Have you picked 1 or 2 goals or cut everything else? Are you willing to be misunderstood, even mocked in pursuit of what you believe? Because Graham will tell you that's the difference. Everyone wants a 5x return. Few are willing to make 5x sacrifices. And if your answer to those questions is sort of, that might be why your business isn't compounding faster. So this is the first lesson from part 2, purpose and strategy, and why purpose is way more important than just the right strategy. Most investors start with strategy. Industry thesis, capital stack, sourcing model, growth playbook. Graham, he didn't do that. In fact, Alpine didn't even have a clear strategy when they started. For years, they were just doing deals. Small ones, mostly sub 5 million EBITDA, scrapping together equity, trying to prove they belonged in the room, and then 2008 hit. The financial crisis slammed into the fundraising world like a tidal wave, and Alpine got left behind. They couldn't raise a new fund, LPs ghosted, the phones went cold, no one wanted to back a small, no-name firm run by a guy with no track record or no Ivy League pedigree behind the fund's brand. For most GPs, that would have been the end. But for Graham, this was like a gift from the sky. Because when no one will give you money, you're forced to ask better questions. You stop trying to be what the market wants and start asking what you want to build. So during the fundraising, Graham sat down and asked himself those 3 questions. Number 1, what do I actually want out of Alpine? Number 2, what would get me to jump out of bed every day for the next 30 days? And number 3, what's worth suffering for? Those questions led him to clarity, let's put it in this way. And the result was Alpine's 3 North Stars, the simple, unchanging priorities that guide everything they do. Number 1, be the best performing private equity firm in the world, measured by MOIC, not IRR. This is crucial. Most firms chase IRR, internal rate of return. It rewards quick flips, short-term gains, and time arbitrage. But Alpine is built on long holds, deep operational value creation, and the willingness to wait. They don't want to look smart on paper. They want to build businesses that last and compound capital 5x over 7 to 10 years, not 18 months. They chose MOIC, multiple on invested capital, as their primary KPI because it forces long-term thinking. It rewards real growth, not just financial engineering. And when Graham said, let's be the best performing firm in the world, he didn't mean it in just a thumping way. He meant, what if we made greatness our actual goal? What if we didn't just try to raise the next fund or get mentioned in a league table or show well at investor conference? What if we try to be great, like full stop? Number 2, be the best place to work for top talent. This might sound like a niche HR slide, but for Alpine, it's the center of the whole machine. Why? Because their model depends on recruiting young, ambitious, unproven CEOs and helping them succeed in the real world, often with zero prior operating experience. They realized early on, if they are not the magnet for elite, value-aligned talent, their entire model breaks. So they pour time, money, and energy into culture. They started the CEO in training program. They created onboarding rituals, coaching systems, a culture of extreme feedback and psychological safety. In this one interview, Graham described a moment where he broke down crying in front of his team after a fundraise failed. A quick break. I want you to introduce you to Spacebar Studios, a sponsor of this podcast. And honestly, if Graham Weaver would know about Spacebar Studios, it's exactly what he'd plug into his portfolio companies, because this is how you build trust at scale with your customers and create compounding owned growth. So what does Spacebar Studios do is they build your newsletter. And want some proof? They took a compliance newsletter from 0 to 115,000 subscribers in 14 months. They grew a hospitality list to 35,000 engaged operators with 5% plus average click-through rate. And they also helped multiple SaaS and services brands convert newsletter-first audiences into 7-figure pipelines and ARR. And they've got the special offer for just HoldCo Builders listeners. The first 6 companies who book a strategy call this month will get a brand new newsletter built for free. Again, no fees, no strings, just their team building your newsletter engine from day one. Spacebarstudios.co to book your free call. Now, back to the episode. He expected them to lose confidence in him. Instead, the opposite happened, because vulnerability created trust. They built a culture where people could show up as themselves and still be pushed to grow and do it like hard. And today, their alumni includes dozens of former CEOs, operators, and executives who still mentor the next wave of Alpine talent. The culture compounds. Most private equity firms are talent repellent. Alpine is talent driven. And so here's the next one. Number 3, use Alpine as a force for good. This is the most unusual North Star, as is said, and probably the hardest to define. But for Graham, it's deeply personal. He said in multiple interviews that Alpine is ultimately about service, helping employees grow, helping founders exit with dignity, helping customers get better service from companies that used to be stuck in the 1980s. He even talked about how, after years of chasing LP respect, he finally let go of trying to impress the Harvard crowd, as he said. You don't need to be invited to the table. You can build your own table. And that's what Alpine is. It's not just, again, private equity firm. It's a vehicle for changing people's lives. From the 20-year-old CEO who goes from imposter syndrome to leadership mastery, to the 63-year-old founder who gets to retire knowing his or her company is in good hands. They've even had situations where Alpine bought the company and found that employees hadn't had reviews, raises, or support in years. One CEO implemented better benefits and recognition program, and retention soared. Morale improved and revenue followed. Again, it's not charity. It's just doing the right thing and watching it really like paying off. So what is the big lesson for the HoldCo Builders? If you don't have a clear purpose, strategy will eat itself. You'll chase whatever shiny, you'll compete where you don't belong, you'll hire the wrong people, and you'll burn out when things get hard. But if your purpose is clear, if you know why your HoldCo or investment firm exists, then your deals, your hiring, your capital allocation, your culture, they all start aligning. And alignment compounds as well. So here's the question Graham would ask you. What's your firm's North Star? What gets you out of bed in the morning, even when deals fall through? LP says no, or you lose money. If you don't have an answer, you are playing defense, as he said, and you're building something that probably won't last at all. Part 3 of this research, winnable games. In private equity and really in business generally, not all games are winnable. I the other day posted on Twitter as well, like, play the games where if you win, you win. Like, you actually win. And this sums it up as well. Like, in private equity and really in business generally, not all games are winnable. And still, a lot of people are playing games where if they win, they don't actually win. So Graham breaks the world into 2 kind of models. Number 1 is the Peter Thiel model. Have one rare counterintuitive insight and use it to win big. Like, competition is for losers, or build a monopoly. And then the second kind of model, the Arnold Schwarzenegger model, grind relentlessly, 2 more reps than everyone else and outwill the competition. Obviously, Alpine is 100% the Arnold model. They don't pretend to have some secret insight into the market. They are not trying to outbrain the smartest guys in the room. Instead, their whole edge comes from executing better over the long period in the right winnable area. Here's what Graham means when he says winnable games. Today, everyone wants to buy a business that checks every box. $10 million in EBITDA, clean books, clear growth levers, experienced management, great industry, banker-run process. But guess what? So does everyone else with money. If you're bidding on that kind of business in a formal auction, you are not the winnable game. You are in a pricing war. That business is going to get picked over by 50 funds, and the buyer will likely be the one willing to live with thin margin of error. Graham learned that the hard way. In the early Alpine days, he tried competing head-to-head with traditional PE firms and quickly realized, we don't have the capital, track record, or network to win those deals. They were showing up at the wrong table. So they made a strategic decision that changed everything. They stopped chasing perfect companies. Instead, they asked the question, where can we win with effort, talent, and grit, not just capital and pedigree? That led them to a very specific segment of the market. Companies doing 2 to 5 million of EBITDA, often founder or family owned, little to no succession plan, limited professionalism, high retention and sticky customers, but no clear leadership pipeline. In other words, good bones, no scaffolding. These businesses are everywhere. HVAC, waste management, elder care, software, home services, all, as we can say, unsexy, fragmented, overlooked. So, the Alpine Playbook. Buy the company, install their own CEO, often a 27-year-old MBA or military vet with 0 direct experience. Give them support, give them training, a coach, and a plan, and let them build the business for the next 7 to 10 years. No auctions, no bidding wars, no 12x multiples. Just consistent execution on a repeatable thesis. This strategy, what Graham calls building great companies from unproven leaders, is only possible because they chose the right game. It wouldn't work if they were buying hedge fund style rocket ships, but in these stable, service-oriented businesses, people are the bottleneck, not the product. Alpine inserts talent into the bottleneck and widens the pipe. It's slow, it's operationally intense, it's the opposite of flipping, but this thing compounds very well. One example Graham shared, they built a software platform by first choosing the industry, not the company. They visited 20 different verticals, talked to operators, assessed fragmentation and customer pain points, and then started proactively building a pipeline around that niche. They hired a CEO before buying the business. Then they targeted the right business, not the best on the paper, but the one where operator could win. This is totally different mindset from most investment firms and most holding company builders. Instead of chasing good deals, Alpine chases winnable deals, the ones they can make great over time. He said, if you get in the right game, you can win with hard work. If you're in the wrong game, the harder you work, the faster you lose. it's not just about obviously working hard. It's about picking a lane where your specific resources could be talent, could be playbooks, could be this grit, what we've been discussing here. And all this actually matters. And it's a lesson for anyone in this space. If you're constantly getting outbeat, struggling to find deals, or hiring turnaround CEOs, you might not be in a winnable game. Instead of chasing perfect businesses that everyone wants, go find the good business that everyone ignoring and build it into something great yourself. So what is some of the takeaways from this point for HoldCo Builders, for investment firm managers? Winnable games aren't the ones with most upside. They're the ones where you have the unfair advantage. And for Alpine, that advantage is talent, it's patience and operational discipline, and not just capital. So if you want better returns, stop trying to buy perfect companies. Start creating them. Number 4, talent as alpha. At Alpine Investors, talent is strategy. It's not the marketing, it's the core of this entire business model, where many firms underwrite industries, margins, or financial engineering levers. Alpine underwrites people. In fact, here's what Graham Weaver figured out years after buying companies. Our best deals had nothing to do with the industry, the price we paid, or the growth rate. They had everything to do with the person we put in charge. That realization flipped the entire firm on its head. Up until then, Alpine, like every other lower middle market investor, tried to do what the Playbook said. Buy profitable, stable companies, keep the founder on for a transition, hire a CEO once the dust settles, and run the business using exciting managers. But that model broke down when founders burned out, or left too early, or stayed too long, or just weren't capable of scaling the business beyond where it was. Graham realized if people are the constraint, then people need to be the solution. So Alpine made a radical decision. They stopped relying on founders. They stopped pretending that the 65-year-old owner could become a scalable CEO. And they repositioned the entire firm around the question: what if we become the best company in the world at finding and developing raw leadership talent? That's their new CEO in training, which is called CIT program. And that's how it was born. It's one of the most unconventional, high-risk, high-upside bets in private equity. Instead of hiring expensive former executives or private equity operating partners, Alpine recruits young, unproven, but insanely high-potential individuals, often straight out of MBA programs, military service, or even completely unrelated fields. Some of the examples in here: a 27-year-old with zero management experience becomes CEO of a 50% IT service company. A former D1 college athlete with no background in software leads a niche SaaS business. A Stanford MBA who was crying in her car before her first team meeting ends up scaling a company to 15 million in EBITDA. These are not polished operators. These are bets, we can call them. And Alpine stacks the tech to help them win. Every CIT gets a coach, often a full-time leadership advisor or experienced executive. What else they get is a mentor, frequently a former Alpine CEO or investors who's lived in the same journey. They get the playbook, Alpine's proprietary onboarding, ops dashboards, customer interview process, and value creation toolkit. And they get the tribe, access to a network of other CIT running Alpine businesses across the portfolio. But here's the key. These new CEOs don't show up with a plan. They show up with the questions. In the interview, Graham shared that the first 100 days are not about strategy. They're about listening. Each new CEO begins their role by asking employees, what's working here? What's broken? What do you wish someone would finally fix? If I could wave a magic wand, what would you want to change tomorrow? And these are very simple questions, and they work super well because most employees in legacy businesses have never been asked such questions. They've been told what to do, but they rarely invited into the future. That's where Alpine's edge, we can say, compounds, because when you combine a hungry, humble CEO with a listening first mindset inside a solid but stagnant business, you get exponential improvements. And here's how Graham puts it. Most of these companies are diamonds in the rough. And the rough isn't the market, it's the leadership vacuum. When we fill it with someone who gives a damn and knows how to listen, things change fast. And it works. Those CITs go to elite business that double EBITDA in 3 to 5 years, build out real leadership teams for the first time, introduce basic KPIs, dashboards, and customer experience improvements, transform cultures by caring about people in ways prior ownership never did. And guess what happens? Employees notice. Graham shares stories of employees crying in exit interviews, not because they were leaving, but because for the first time in 25 years, someone cared enough to ask how they were doing. So to give you an overview of their financial punchline, Alpine often buys companies at 6 to 8 times EBITDA. Their CIT-led companies often double EBITDA in 2 to 4 years. So that same business is now worth 12 to 16 times the original profit base, without even needing to flip, refinance, or inject new capital. What changed? As it wasn't multiples, but it was the multiple didn't change, the people did. That's why they don't chase deals. They build the conditions for greatness and then insert the person who can realize it. And because Alpine owns the leadership pipeline, they're never scrambling for a CEO. They're training the next one before the current one needs to exit. This is organizational leverage. The same way Warren Buffett talks about financial leverage or brand leverage, Graham has built leadership leverage. So what is the takeaway for investor, fund manager, HoldCo Builders? If you're constantly struggling to find good general managers, or your integrations stall post-acquisition, or your culture never quite clicks, maybe the missing piece isn't another process or software tool. Maybe it's talent. Maybe it's this person, this specific person you have to find. Again, and not experienced talent, but raw, high will, high integrity, coachable talent. The kind you can develop, the kind who listens before you lead, the kind who would rather grow the pie than cut themselves a bigger slice. Because Alpine's not winning by paying higher prices or using fancier models. They're winning because they invest where no one else is looking, and they invest in people, not just as operators, but as assets that compound. You have part number 5, which is building platforms from scratch. When most people think of building a holding company or investment firm or private equity platform, the process looks something like this. Step number 1, you find a great business. Step number 2, you buy this great business. And step number 3, you hope you can build around it. This is not Alpine's approach. In fact, Graham Weaver would probably say that's completely backward, because in their model, you build the platform before you buy the company. Let's take Alpine's HVAC business, Apex Service Partners, as a real example. Today, obviously, it's massive, like a nationwide platform with hundreds of millions in EBITDA. But what makes Apex special isn't just its size, it's how it was intentionally designed before a single deal was ever closed. And here's how it happened. Before buying anything, Alpine did something radical. They hit pause and they started studying the industry from the outside. They sent their team on site visits to 20 plus HVAC companies around the country, not as investors, but as observers. They asked questions, took notes, shadowed the technicians, talked to CSRs, watched dispatch software in action, because they wanted to know what makes one HVAC business grow 20% a year while other flatlines. Why do some have a strong culture and others can't keep employees? What tech tools matter? What KPIs do the best operators track? How do they price, staff, finance repairs? Out of that ground level work, Alpine distilled like a set of winning traits, we can say. The fingerprints of top performing companies. Things like high call conversion rates, low technician turnover, strong customer referral loops, recurring maintenance revenue, operational leverage from smart dispatch systems, proactive versus reactive leadership. And this became their blueprint, but they didn't stop there. Before acquiring anything, they hired a CEO and a CFO. Yes, they literally recruited the leadership team before they even owned the company. They took someone through their CEO in training program, trained them on Alpine's frameworks, plugged them into the learning from the 20 company tour, and he said on this, we are going to buy a HVAC business for you, but we are designing this to be nucleus of something much bigger. And then they got to work building a platform before owning it. They created a draft ERP architecture, a centralized BI dashboard and reporting stack, a first draft organization chart for post-acquisition integration. They built brand standards. They created playbooks for recruiting technicians and CSRs. They created a finance model that worked for regional roll-ups. They created a cultural artifacts that could scale across multiple geographies. Only after all that preparation did they go out and buy the first company, which became the anchor acquisition for Apex. And from there, the flywheel began to turn. With the right CEO in place, with a strategy already mapped, with a recruiting pipeline already active, with dashboards already designed, they started acquiring smaller tuck-ins, most doing under 10 million in revenue, and integrating them into a platform with minimal friction. And here's the kicker. They didn't raise any additional equity beyond their 50 million anchor investment. This wasn't a capital-heavy blitz. It was a strategy-heavy compounding machine. They kept layering in acquisitions, kept refining the playbook, and let the operator grow it into the vision they've built before the first deal ever closed. Fast forward a few years, Apex now does over 500 million in EBITDA. That's not the typo again, that's 10x growth, all from intentional platform design. No bankers brought them this deal, no mega firm handed them a roadmap, they just did the work. So what is the lesson for you? For you as an investor, HoldCo builder, platforms don't magically emerge from one lucky acquisition. They're architected deliberately before the money ever hits the wire. That's the Alpine's playbook. Pick the industry first, not the company. Do the field work, walk factory floors, interview employees, shadow the ops. Number 3, build the scaffolding. Talent, systems, playbook. Place your talent. Insert the operator before you scale. Acquire methodically. Each new deal should fit the blueprint. And number 6, reinvest relentlessly in people, in data, in process. This model flips traditional private equity thinking on its head. Most firms look for momentum and try to catch it. Alpine creates momentum by designing the platform, then executing with brutal clarity. And the real kicker, this isn't just one-off success. They've repeated this model in other industries too. Take software, home services, B2B verticals. Because how they can do that? Because the system is portable. And what is the key takeaway? If you want to build a HoldCo that compounds, investment firm that compounds, stop thinking like a deal maker, start thinking like an architect. Now, the next big idea, managing for long-term value. Here's one of the simplest but most important truths maybe Graham shared during these interviews and the research I did. You can't compound if you keep selling your winners. Let that land for a second and then let's move on. Most private equity firms, even the good ones, they are built to exit. The moment the portfolio company starts performing well, they put together a pitch deck and send it to a market. Why they do that? That's because what LPs expect, because IRR rewards shorter holding periods, because they're measured by fund cycles, not business health. But Alpine takes a radically different view. They start every investment with a baseline goal, which is like 3x MOIC, but that's just the floor. The real magic, the reason they've reached 5x returns across funds is because they let their best business run. They don't sell their crown jewels. They compound them. And that's not just a capital allocation decision. It's an operating philosophy. They are doing all this not to flip, but to build. Now, let's unpack how this works in practice. Graham has said over and over that you can't underwrite 5x outcomes with spreadsheets. The world is too messy. There are too many unknowns. But what you can do is build a system that gives you a chance to accidentally create 10x outcomes. That's how Apex Service Partners, Alpine's HVAC platform, become one of the largest home services business in the country without ever raising additional equity. They didn't plan for Apex to become $500 million EBITDA machine. They simply kept holding and growing a great business. Same story with Riverside Insights, their education platform, and Alpine Software Group, ASG, which has become a full-scale software HoldCo with multiple verticals. Each of those platforms could have been sold for excellent return years ago. Instead, Alpine asked, what would this look like if we held it forever? And once you ask that question, your entire behavior could change like it did for Graham. Number 1, you invest in culture. not just margins. Number 2, you spend real time on succession planning. Number 3, you treat customers like long-term partners, not quarterly revenue. And number 4, you make decisions that won't pay off for 5 to 10 years. And all this, that's okay for you. That's how compounders are built. Not by squeezing every last dollar out of the business in 3 first years, but by playing the infinite game. And that infinite game creates asymmetry. Because while your average business could maybe grow 2 to 3x and return the fund base case, 1 or 2 breakdown companies, if held, can return the entire fund on their own. Graham has said Alpine could hit its overall return targets with just a handful of these outliers, because they are not optimizing for short-term IRR, they're optimizing for terminal value. We don't need every company to be a home run, but if we build a system, hire the right talent, and stay disciplined, a few of them will become oak trees, and that's enough to move the entire portfolio. This approach requires something most private equity firms don't have. It's restraint. When a bank comes knocking with a 12x offer, most firms say yes. Alpine often says not yet, because they know, number 1, the business still has more runway. Number 2, the operator is just getting started. Number 3, the flywheel is spinning faster each quarter. And number 4, and the best is probably still ahead. So what is the punchline for HoldCo Builders, for investors, for you? If you want to build I'm talking about real wealth, and the one that really lasts, stop measuring success by exits. Instead, measure success by durability. Ask yourself, are you running your business like you're going to own it for 30 years? Are you building infrastructure that compounds or duct taping things until sale day? Are you growing leaders who can eventually replace you, or trapping yourself in the founder seat? Because the dirty secret of lower middle market is this: most people are flipping because they don't know how to grow. But if you build systems that compounds, take hiring, culture, financial controls, ops dashboards, brand trust, then every year you hold the business, it becomes more valuable, not less valuable. And that's the Alpine's way. And for those of you building holding companies, investment firms, what is the playbook? What is the big lesson is: don't rush, don't sell your winners, optimize for long-term cash flow and terminal value, and let greatness mature on its own clock. Because in the end, the businesses that change your life won't be the ones you flipped at 3x. They will be the ones you held at 5x, 10x, and then never sold at all. And part 7, I left this for the last lesson, and it's personal growth as a business strategy. Over the years, obviously, it has changed, but I think the mindset part has been not in the main focus for a long time. And obviously, Graham, with all his content, all his speeches he has done, things have already started to change. And for Graham, all this mindset thing and personal growth, it's the main course. He has called this to being his personal growth journey. And again, it's not self-help for self-help stake, but it's the strategy. And Graham will tell you straight up, your business will never outgrow your mindset. Every bottleneck you hit, operational, cultural, strategic, probably reflects a bottleneck inside you. That's why Graham doesn't just invest in companies. He invests in coaches, mentors, reflection, and mindset work. And he does it every single day. And I'm sure those amounts are crazy large now. He said that when he first started, he hired a coach for himself, executive coach. It was super expensive, but obviously the absolute best decision he has ever done. And I'm sure that he invests millions of dollars per year in his mindset work every single year. So he had dozens of coaches, not just generic executive coaches, but specialists. One to re-architect Alpine's organization chart, one to pressure test his strategic thinking, one to hold him accountable to his weekly goals, one who works only on long-term vision and blue sky clarity, one just to challenge the limiting beliefs that quietly run his operating system. That's crazy. I already counted you 5 coaches. So my question to you, how many coaches do you have? And it's interesting to say that we oftentimes expect to achieve those wild returns, find those great deals, do big things. But as we can see, all this starts from again, from us, super logical, but this guy, Graham Weaver, I just counted you 5 coaches. He probably has more. And he said that coaching is not a luxury. It's an infrastructure, a system to prevent drift, sharpen focus, and deliberately evolve. And it started early. Again, remember, back in the high school, Graham was already writing down his goals 3 to 4 times a day. How many are you doing this? He does that every single day. He didn't do it for motivation. He did it because he understood, even as a teenager, the clarity compounds. In college, he carried his life goals around on a note card. He'd read them silently as he walked across campus. Later, he taped them into his bathroom mirror. As he says in the interview, most people drift. I didn't want to drift. So he created friction, structure, mental conditioning. And as Alpine grew, he applied the same framework to company itself. Number 1, weekly partner check-ins that go deeper than metrics. Regular offsites to revisit not just goals, but who they're becoming as a firm. And number 3, performance reviews that measure not just what people did, but how they showed up. That is the most investors, and that is, I think, the part most investors miss. They obsess over leverage, pricing, deal flow, but they never ask, am I growing at the rate I expect my team to grow? Am I leading by example, in mindset and not just direction? Because, as we can see, Graham does, and he does it super well, and this thing works. He even says his biggest breakthroughs, the moments that changed Alpine's trajectory, almost never came from spreadsheets. They came from introspection, from confronting uncomfortable truths, from catching himself operating on outdated beliefs. For example, he used to think that only experienced CEOs could run large companies. What he does now, Alpine installs 27-year-old into 8-figure businesses. What else he believed? He used to chase prestige, trying to raise capital from Howard Crowd. Now he builds LP relationships based on value alignment. What else? He used to fear slowing down. Now he meditates daily because it forces him to pause and notice what matters most. So that's why I did this podcast. There's so many lessons we can learn from Graham. So what does this mean for you? You as an investor, you as a HoldCo builder. The hard truth, if your company is stuck, you might be the one in the way. If you want the business to scale, if you want your team to be bolder, clearer, more accountable, if you want your outcomes to improve, start with one variable you can actually control. This is yourself. Ask yourself, do I know exactly what I want? Am I telling myself a story that limits my options? What is holding me accountable? Not just for performance, but for evolution. What would it look like to 10x my mindset before I try to 10x my company? Because Graham Weaver didn't build Alpine by playing the traditional private equity game. He built it by playing the inner game first. That's the ultimate takeaway from here is business is personal. If you're not growing, neither is your company. So if there's one meta lesson from Graham Weaver and Alpine Investors, play the long game, not just in your investments, but in yourself. Because Alpine isn't a story of perfect deals or perfect timing or perfect pedigree. And I think this gives my personally like an super high motivation as well, is you can start whenever you want. It could be today, it could be in 5 years, it could be maybe you started a year ago and things are not going as planned. There's so many lessons in this episode itself of why it maybe hasn't happened, and most importantly, how it can happen if you're just starting today again. Play the long game, not just in your investments, but in yourself. Alpine is really a story of 25-year-old who took out a $25,000 loan to start a firm with no LPs, no fancy track record, and no competitive advantage except relentless will. It's the story of a guy who listened to Earl Nightingale and Brian Tracy while mowing lawns at 12, who got 30 pounds just to wrestle varsity in high school, who wrote down his goals 4 times a day in college because he believed success had to be earned mentally before it could show up physically. And it's the story of someone who, when the 2008 financial crisis dried up capital, didn't pivot into safer path. He went deeper. He asked better questions. He rewired his firm and his life around 3 things: world-class returns, a talent-first culture, and using business as a force for good. From there, Alpine didn't just start winning, we can say. They started like compounding, like seriously. Not because they were the smartest, but because they were the most aligned. They built platforms before buying companies. They hired raw talent and developed it. They managed for terminal value, not IRR. They invested in mindset, not just multiples. They treated personal growth as a strategic asset because Graham understood your business will never outgrow your own philosophy. So what does this mean to you? One last time. If you're building a holding company or even thinking about your next acquisition, don't just copy Alpine's outputs. Copy their inputs. Study industries before you deploy capital. Hire future leaders, not polished resumes. Architect your platform. Don't improvise it. Coach yourself like your future depends on it, because it does. And most of all, make bold decisions. Not because they're easy, but because they're right. Because Graham didn't build Alpine by outperforming other PE firms. He built it by outbehaving them. He listened more, he cared more, he bet bigger on people, and he played a longer game than anyone else was willing to. And that's the blueprint. So if you want to build a HoldCo that lasts maybe 10, maybe 20, maybe even 50 years, one that can make you like super proud, compounds for decades, and actually changes lives, start with a question Graham asked himself every morning. What would I do if I knew I wouldn't fail? Again, that's your next move. Thanks a lot for listening to this HoldCo Builders episode. If there is a friend or a colleague you think this episode might be helpful, or a partner, please go and share this with them. And if you're first time in here, or if you haven't subscribed or followed the podcast, please do so. I post 1 or 2 of such episodes a week, and I really appreciate you listening. So go build your own fund, go do your own deals. So many lessons you can learn from Graham. And most importantly, thanks a lot for listening, and see you next time.